Good morning, I'm Tim Carter. I'm a Client Portfolio Manager on npower's Optimisation Desk. Welcome to this morning's market update on Tuesday the 22nd of December. So looking at the markets, we found a touch of support today, just coming up off the lows from yesterday. The key drivers today are, number one, we've actually got a very comfortable power and gas systems today, which is going to keep any gains in check. Number two, we've seen oil prices just pick up a little bit off the 6-year lows from yesterday, probably through technical buying more than anything. And finally, number three, we're seeing the pound continue to weaken against the euro, a trend which has been extended through the last month or so. So those are your main headlines. If you'd like any more information, please contact us on the email address provided. Otherwise, please continue to watch for a bit more detail. So, looking at that gas system in a bit more detail, we're seeing line pack forecast around 5 MCM long at the moment. So it's a reasonably comfortable picture, albeit there's not much change, to be honest, from previous days. We're still seeing temperatures suppress domestic demand, whilst there is some additional demand created through UK exports of nearly 30 MCM and just a slight amount of injection into storage as well. On the supply side, though, it's very much the same picture as we've seen over the last couple of weeks, really. Norwegian flows are healthy, good flows through the BBL pipeline from Holland, and decent LNG supply as well. On the power side of things, we're seeing healthy wind generation again today, around 4.5 gigawatts. When that's combined with the return of IFA full capacity last week, along with Hartlepool nuclear reactor restarting today, which was on top of Heysham restarting yesterday following recent outages, we're actually seeing peak margins in excess of 15 gigawatts today, which is quite unfounded for this time of year. Looking at those oil markets, as I said, not much in the way of fundamentals to support a slight lift off the 6-year lows we experienced yesterday. Brent's trading around 36.60 at the moment. We are expecting EIA official US inventory data out tomorrow, but ahead of that, the latest Bloomberg survey suggests around about 1 million barrel build, which is just going to weigh on the oversupply sentiment in the market, really. Elsewhere on the foreign exchange markets, we've continued to see the pound weaken against the euro, now worth just over 136. This is really a continuation of a trend that began earlier in the month when Mario Draghi extended the quantitative easing stimulus, but that went some way short of what market expectations were, and it's very much assumed by a number of analysts now that Draghi is kind of achieved his desired devaluation of the euro, which is helping to boost the European economy to a sufficient level to bring the euro back to what looks like fair value moving into 2016. That's it for today. Again, have a great day, and we'll speak to you again tomorrow.